Hi all, greetings to everyone. Welcome back to Samsware, your weekly compliance tracker. We're Samsware Advisory Private Limited, a one-stop shop solution for all of your compliance needs. After our introductory video, as promised, we are back with the weekly updates related to global compliance. Before we proceed, let me remind you all to click on the bell icon below to never miss out on any regulatory update that might affect you as a business entity. Let's move ahead with the headlines for this week. The National Legislative Assembly, Thailand, has published the redrafted Labour Protection Act and employees need to be wary. The National Legislative Assembly, Thailand, passed an amended Labour Protection Act on December 13, 2018, which was recently published in the official gazette. The key amendments the employees shall be wary of are: maternity leave has been increased from 90 days to 98 days, paid business leaves of at least 3 working days per year shall be granted to the employees, transfer of employees from one business entity to another due to corporate restructuring shall be carried out with the employee's consent, and where he does not consent to such transfer, he shall be entitled to a severance pay. The statutory severance pay for employees who have worked for at least 20 years has been increased to 400 days at the employee's last wage rate. Employees shall pay an enhanced interest of 15% to the employees if they default in the payment of wages or severance pay. Employers are required to pay wages to both male and female employees who undertake work of the same type, quality, and quantity at the same rate. Several additional penalties have been introduced for employers who fail to comply with the provisions of Labour Protection Act. New Act on Data Processing has been adopted by Czech legislative authorities. The Czech Republic, being one of the last countries to enforce the provisions of the General Data Protection Regulations, has finally received the Czech President's accord, and the new Act, Czech Data Protection Act, has been enforced. The Act implements the provisions of the General Data Protection Regulation and stipulates certain exemptions therefrom. The key provisions include capacity to grant consent for data processing upon reaching the age of 15 years, establishment of Czech office for personal data protection, exemption from carrying out data protection impact assessment prior to the commencement of data processing, sanctions for breach of the aforementioned Act. China steps up efforts to clean up restrictions on foreign investment. The Ministry of Commerce on July 2, 2019 intensified its effort to remove restrictive measures on foreign investments that are not specified on the revised negative lists. The ministry informed that it will implement new negative lists for foreign investments, cut administrative red tapes, cleaning up regulations and rules that are not in line with the foreign investment law. The revised negative lists for piloted free trade zones and the rest of the country contain fewer access limiting items of 37 items and 40 items respectively. That is to say that the items of the negative list for foreign trade zones are now reduced to 37 and for the rest of the country are reduced to 40. An update on the Indian Union Budget 2019. Threshold for applicability of lower corporate tax rate of 25% increased from Rs 2.5 billion to Rs 4 billion. The Honorable Finance Minister of India, Ms. Nirmala Sitharaman, announced on Friday, July 5, 2019 that the threshold for the lower corporate income tax rate of 25% will be enhanced from Rs 2.5 billion to Rs 4 billion. Thus, all companies that have a turnover not exceeding Rs 4 billion will now have to pay a lower corporate income tax rate of 25%. It has been estimated that about 99.3% of all companies in India will now have to pay the said lower corporate income tax rate. Additionally, Budget 2019 of India has proposed reforms to GST Act, Insolvency and Bankruptcy Code, proposed quarterly filing of GST returns for taxpayers having an annual turnover less than Rs 50 million, proposed rationalizing of labour laws into 4 labour codes. Extension of VAT to non-resident e-commerce sellers in Vietnam. From 1st July 2020, VAT in Vietnam is to be extended to non-resident e-commerce sales to consumers, which will apply to goods and digital services. Now, banks, payment providers, and credit card issuers will be responsible for collecting VAT from non-resident e-commerce sellers, identifying payments made by consumers to non-resident e-commerce sellers, and deducting withholding VAT. The non-resident sellers who have crossed the threshold for the local VAT registration will also be required to register for VAT, which will also provide non-resident e-commerce sellers a VAT credit. Separating domestic and EU VAT registration in Ireland. A two-tier VAT registration system is currently under development by the Irish Revenue. whereby an individual can apply for a domestic-only registration or intra-EU registration. The goods and services supplied and received in Ireland come under domestic-only registration, whereas intra-community acquisitions from and reporting of intra-community supplies to all EU member states including Ireland will come under intra-EU registration. It has to be noted that the existing VAT registered customers are deemed to be intra-EU VAT registered. I request you all to like and share our content. Feel free to comment below with any queries that you may have related to compliance. We will do our best to solve them. You may also contact us through our Twitter handle, Facebook page, LinkedIn page, or our website. Links in the description below. Until next time then, thank you.